Hello everyone and welcome back to another video. During this video I'll be discussing one of my favorite strategies to use when trading forex. I only tested it for forex trades and forex pairs. I haven't tested it on any other instruments, for example stocks or commodities. So if you want to use that on other instruments, you need to be testing that on those instruments. I've tested it on many forex pairs and I know that this works well in the forex market. So I'll be discussing with you why this works, what is the strategy, and why you maybe want to be using this. So stay tuned for that. So to get started with our strategy, we're going to need a couple things, couple indicators to help us with our strategy. And those indicators are going to be some moving averages to help us identify the trend and where prices have been moving in the past few candles, and also the RSI. And let's get set up first with the RSI. As you can see, I've already set mine up, but we're going to be modifying this in order to fit our strategy. So by default, the RSI has 14 periods. Instead, we're going to be using 6 as length. This means that we're using a shorter term RSI than the usual one. And we are also going to be changing the lower and upper bands for these RSI. So instead of 70 and 30 for the overbought and oversold areas, we're going to be using 80 and 20. And this will help us identify oversold and overbought areas to the extreme levels for short-term uh, periods. So you should be looking something like this in your chart. So the bands being on the 1820 and a bit more aggressive RSI movement than what you are usually used to if you're using the 14, because we are using shorter term periods for the RSI to be calculating. Thus, we're expecting a bit more volatile up and downs than the 14 one. So that is it for the RSI. And we are also going to be using a couple moving averages, and in order to accommodate the minimum the maximum of 3 indicators for the trading view, I'm going to be using 2 moving averages simultaneously. So you can see I'm using the MA 50 and 200, which is available on TradingView, and you can search it to add that. And this is going to be for the hourly. So for the hourly time frame, we're going to be using the 200 and the 50. In my case, I've used the white color for the 200, so the long term will be the white and the short term or the 50 will be the blue. And we also need two moving averages for the daily. So if I were to move to the daily time frame, you're going to see this. You don't necessarily need to include the 50 and the 200. I just like to include that as well, but it's not necessary to include that too. And for the daily, we're going to be using the 9 and the 21, and I'm using again the MA 50 and 200, but I've changed the inputs to 9 and 21. And this will help us through the hourly and the daily moving average to identify where prices has been moving and what trend are we on. So to elaborate, we are going to be looking and comparing the 2 averages on the daily and the 2 average on the hourly, and if the direction of both match, it means that we might be looking at a potential trade. So we are going to be looking at, let's say, the daily. The colors for the daily is the 21 is the purple and the 9 is the yellow. So the short term is the yellow, which is the 9, and the 21 long term for the daily. And when the yellow or the short term moving average is beneath the purple, it means that we are in a downtrend. And if the short term is beneath the long term one on the hourly as well, we should be looking to get into a trade for short or selling position. So you can see in this case, you can see the 200 being above the 50, meaning that in short term we are downtrending, meaning that we are looking for sell positions, and vice versa. If let's say the 200 is beneath the short term, so the 50 above the 200, we are going to be looking at long if the daily time frame match. So if I were to go to the time frame for here, if the yellow is above the purple, so the short term is above the long term of the daily, and if the short term is above the long term on the hourly as well, we're going to be looking at the position. So essentially, we need to be having an aligned direction. So both daily and hourly moving averages need to be aligned and looking at the same direction. So both either be signaling for a long position, or both signaling for a short position to be looking at trades. If either, well, if the let's say the daily is signaling for a short and the hourly is signaling for a long position, we won't be getting into a trade. So both of these need to be lined up. So let's have an example of how the strategy looks like and what you should be looking at. So in this case, we are on the Euro US dollar and we are looking at our chart, and you can see that the short term, so the blue line or the 50, is above the 200, and same goes for the daily. So if I were to first put this, let's say, onto here to help me spot where we are on the daily, and let me just find it. So you can see that the yellow or the short term is above the long term, which is the purple. That means that both of these are aligned and we're looking for long positions. So let's go back to the hourly. The strategy is performed on the hourly. So we're going to be looking at the hourly for our entries. So how does this strategy works? When we have identified a trend, so you can see that we have our 50 just crossed above and moving above, we're looking for retracements of price to the 200 moving average, as you can see here. So this position, we are looking at taking a long position, because first of all, it retraced back to the 200 moving average, and also the RSI, as you can see here, is oversold. That means that we might be into a good trade. So the RSI reached 7, about 7 on the RSI, means that it's heavily oversold, while we are on an uptrend. That means that we want to be taking trades long, and in this case, once you see a confirmation candle, so confirmation is kind of like uh, each trader looks confirmation candles in a different way. For me, this would have been my confirmation candle. So not the first one, not the second one, but the third one. So my entry would have been on this candle right here, and I would be targeting previous highs, so where the trend was before. So if I were to grab this and push it, I would say about this point right here, and my stop loss would have been beneath where my wick was, so where the price reached, and will have been slightly beneath that. And if you see, we actually get the trade. So it reached at this point right here, we will have gotten the trade. So what you should be looking for this strategy is for moving averages to be aligned for the hourly and daily, and you're going to be looking for retracements back to the moving average. And once you see that, you need to wait for a confirmation. So confirmation can vary on how a trader sees this. So for example, you might be going down to lower time frames and looking at those moving averages and use those for confirmation. Some just wait for a pattern, let's say an engulfing candle or a pinball or whatever. So it depends on how you view confirmation. You It will be solely on you and your decision making to get that confirmation. So for me, it would have been, as I said, this position right here, because you can see it reached back to the hourly and rejected and pushed upwards. So this will have been my entry. Some more aggressive traders will have gotten on the previous candle, or maybe even the first green candle that they saw. It all depends on how you view it. If you need extra guidance on this, you might be looking at the RSI and thinking, okay, the moment that the RSI goes back into the uh, above the 80 or the 20, so beneath the 80 or above the 20, so goes back into our kind of area right here, we are going to be entering that trade there. In terms of risk to reward ratio, I usually like to keep things above the 2 reward to risk ratio. So I preferably around 2.5. So I think this was around 2.5. Uh, so kind of like this. and you can see it was actually 3.6, but the stop loss would have been slightly lower, so around this area. So you can see we can get a great risk to reward ratio if we get the uh, retraces back to the 200. I'm not going to be entering on the 50. I don't like entering the 50. I usually like to be entering on the 200 because it gives me a better risk to reward ratio. Even though you can still enter on the 50, I prefer not to. So it all depends on the trader. I prefer to take less trades but of higher quality. So this will have been how I will enter the trade in this specific scenario. So let's look at another scenario right here. We can see on after we get the trade, so you can see eventually this hits our take profit, and then let's get rid of that, and you can see price again retraced afterwards onto this point right here. And what happens if it drops beneath the 200? Is that a problem? Do we still get the trade? And I usually do take the trades, but I would usually use the pivots. Unfortunately, I don't have that in the trading view. I usually trade on the MetaTrader. Unfortunately, it looks I prefer doing my videos on the trading view. So if you're trading, if you have additional indicators, you can use the pivots to help you with where price might be moving. And also in cases where price drops beneath the 200, I'm a bit more cautious as we might be onto a reversal. So what you can do is either wait for uh, the price to move above the 200, or you can in case it hits, let's say, its support zone. If I were to zoom out, I'll usually go and move to the left side and see if there is a level at this area right here where I can use. And for example, in this case it does. So you can see it hits this area right here, right here, right here. You can see it wicked out but came back down to it right here. So you can mark this as an area even though it's not the strongest resistance zones. You can see it hit directly onto that and pushed upwards. So in this case, you can either take the trade on the first candle that you see here, which is an engulfing candle, and that's a great indication of that price might be moving towards your way. And again, if you want to be conservative, you can take a trade something like this. So around the previous high right here where it reached both times up to this point. So this will have been my trade, I think, around this area. And again, we get above the 1 to 2 rewards to ratio. And obviously, if you want to be a bit more aggressive with your take profit, it all depends on the trader. This is how I would play it out. If you want to be a bit more aggressive and expect price to be moving upwards, has been an uptrend, you can play more aggressively and look left and play it accordingly. In this case, I would rather keep it right here. As you can see, there is a level of respect here, so I would keep it around this area. So that is why I would be targeting this level right here. And again, you can see that price retraced back to this area. Again, same plan, but I want to be looking at the opposite result, or the opposite, let's say, when we are in a downtrend. So I will be having a look at that right now. So let's have a look at another example here, but we are now going to be looking for short positions instead of long positions. So we are in a downtrend. You can see the moving averages lining up to be on a short position, and the daily also confirms that. So if I were to place a mark right there and look on the daily, you can see that the short term is beneath the long term, and that goes on for a while. So that is great for us. And just by looking at this chart, you will notice that the strategy, without having too much thought onto it, you will see that the strategy works great. So let's have a look at kind of a general idea of how this plays out. So if you see on the RSI right here, each time it reaches the area of overbought and uh, see how price reacts afterwards, you will see that price moves downwards to where you want it to be. So if you were to place a short position each time the RSI was overbought close to the 200 moving average, you'll have gotten great trades out of it. So let's say, just for example's sake, without putting too much thought into it, you can see overbought area, just placing a trade and targeting previous uh, regions. So this will have been one trade that you will have gotten, and next time it reaches the moving average, this will have been another trade. So you can see RSI being overbought, placing the trade right here. The stop loss will be around this area. So taking into account the left side and where price was and where our wicks was, I will have placed. It depends. Now it depends where you want, how aggressive you want to be with your take profit. So this depends on how you want to be trading. If you want to be a bit more aggressive, you can place your take profit on previous lows on the left hand side here. If you want to be a bit more conservative and safe, you can place your take profit to where price was recently, so the previous low that it made. So in this case will have been here, and you still have gotten a 1.74 risk to reward ratio, which is still good. I would probably have gone for this one as well, considering how price reacted twice onto this level right here, and you will have gotten the trade as well. So you can see, without putting too much thought into it, just by simply following our simple rules, you can see each time it reaches an overbought area. So this could have been an entry, this could have been an entry. So it depends on how aggressive you want to be. So for example, in this area, I didn't actually hit our 200 moving average exactly. It was very close to it, which I will still count it, but I will probably not take the trade because of how close it was from uh, the previous lows. I would have liked price to retrace slightly more for me to get that confirmation. Let's say, for example, the next time it reaches this area right here, so you can see that it reached the 80 on overbought side on the our RSI. So you can take a trade right here as well. It all depends on how aggressive you want to be, but looking at the general idea of this strategy, you can see how well it works on certain pairs. There, not all pairs are meant for this strategy, and I have tested this strategy for a lot of pairs, and I like usually pairs that involve the US dollar or the New Zealand pairs, which are my favorite. I also like the Great British Pound pairs. So these are my favorite and the ones that I usually trade with. You can see that I am currently on a US dollar pair, and one that I usually take trades on. So I'm just giving you a general idea without looking too much into the strategy of how well this strategy works with simply following the rules. So each time it reaches an overbought area, just place a trade looking at left hand side and targeting previous lows and setting your stop loss up around where price was before. So you can get close to 2 risk to reward ratio, even better in most of the times. So I'm usually targeting a 2.5 risk to reward ratio. It depends on the scenario. So you can see, if you were a bit more aggressive, you could have gotten a wild trade right here, for example 5.5, but obviously you wouldn't know that. So just by taking conservative trades, you can still get great risk to reward ratio each time price retraces to the 200 moving average. So again, placing a trade each time you will see, oops, wrong too. So placing a trade each time it reaches the moving average and retraces back to the moving average of the 200, and place that around this area, you will see again getting crazy trades out of it. So this was around 2.8 risk to reward ratio, and you can see how consistent this is with our strategy. So hopefully you found this video useful, and I would recommend you testing this strategy out and getting comfortable with it and the pairs that you're going to be trading before in a demo account, before entering with your own balance and risking your own money, so you can get comfortable on how you would react in a normal account and get a bit more experience with the strategy before going into the real situation. So it will give you a better idea and a bit more kind of training to your how you would react in different situations. So this is the strategy, and just to summarize what we're looking for entering a trade with this strategy. We're looking for an RSI which I adjusted for this strategy to be of length 6. So we're looking for overbought and oversold area of over 80 or beneath 20. Then we're looking for retracements of close to the 200 moving average on the hourly, and we also need the hourly and daily time frames of the moving average to be looking at the same direction, so either both looking bullish or bearish. So this is the strategy. And lastly, also taking trades after a confirmation. So you don't want to just be entering trades after it hits an overbought area. You need to have some confirmation that the trade is going to be heading towards your way. Setting take profits and stop losses depending on where price was, and playing around that. And also, before entering a trade, make sure to have a good risk to reward ratio. You don't want to be entering a trade that looks kind of like this, where it's just 0 point 0.8 and risking more money than you're actually going to be getting. So this is the strategy. I hope you found this useful, and give me your thoughts on this strategy and how well you've managed to perform with it. If you have any recommendations for a video, make sure to comment below, and if you have any thoughts, again, comment below. Thank you for watching and have a good rest of your day. Goodbye.